Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Hey everyone, good morning and welcome back to another live stream. I hope you are doing well this Friday morning and looking, well, afternoon for some of you guys, wherever you are in the world. I hope you're doing well. It's almost the weekend. Markets, of course, starting their Friday session here. We'll see if there's any movement. All things said and done, it has been a relatively quiet market recently. The VIX is still down towards the low end of its range. We also, of course, see the S&P 500 did have some gains this week. Take a look at the weekly chart and you can see yet again another green candle here printing for the bulls. Dollar index also staging a bit of a recovery move here. And if you listened yesterday to my video, I mentioned I do think that the dollar is likely to have a little bit further of a rebound. I would not be surprised if we do continue to see this dollar index rebound. Not necessarily saying that I am bullish on the dollar, but we have certainly seen a shift. And I'll talk a little bit more about that as we get started here. As you saw in the opening, if you're interested in checking out DNA Funded, here's the QR code. And if you use the promo code A1Live, you can get 25% off. They're offering significant discounts to my viewers. Well, I should say our viewers, the A1 Trading Show. They've really hooked us up across our live streams that we do here with discounts for subscribers. They're sponsoring the show and we greatly appreciate them. Sponsors make this stuff possible. Cut to the chase. Somebody pointed out in my comment section yesterday, they said, Nick, this is you're making this content because it's a business. And I was like, yes, most people who are here understand that content doesn't make itself. It's not free to do. There's a business behind this, and I'll never hide that from you guys or try and disguise this as some sort of charity work that I'm doing, right? We invest, we work, countless hours on this stuff because it's meant to be content that is genuinely helpful and backed by real trading results, but it is also a business, and there's no hiding that or trying to come across otherwise. But if you are interested in getting funded and you are in that journey and you're at the point where you're like, okay, I'm ready to take on a challenge, consider checking them out. Link is right below me actually with the QR code. Also, I found out QR codes work. You guys like QR codes. I asked that a couple of days ago. I said, are QR codes something you actually use? And lo and behold, people do choose to use QR codes. I guess it's much more accessible than I knew QR codes worked, but sometimes you just don't know like which things preferred. Or do people prefer to use the description link, etc.? QR codes are a go-to apparently. So anyways, just a quick, we'll come back to the dollar here in just a second because we are tapping into some resistance today. Gold, a little bit lower here this week. I should say it was pretty mixed week. I think we had a flat week for gold. Yeah, so you didn't have any further gains in gold. I wouldn't call this bearish. Yes, you do have a little bit of a couple days down here following the Fed press conference with Jerome Powell. We did get some ideas that the Fed does plan to essentially keep cutting interest rates. However, the chairman seems a little bit more hawkish than perhaps consensus in the bond market, right? So the bond market thinks we're going to cut. I think we probably should continue to cut rates. The labor market looks in trouble. But Powell came across a little bit more, he called it a risk management cut, still sees risks to both sides of the mandate. And I think there is the possibility that you do see more cuts, but I think Powell's commentary was perceived as a little bit more hawkish than the market expected. Hence, gold is moving lower here. I would not be surprised. I mentioned this earlier with the stronger dollar thesis. In the short run, we're finding some longer term levels of support here. And that strength in the dollar could lead to metals to pull back. I would love it. I would love if we got a pullback in metals. It would potentially give me an opportunity to rejoin the trade. So yeah. What's up, Ball Out? Good to see you, my friend. Whatever happened to the trade deals? Talk about how no one wants to make a deal with us, and they're busy making deals with each other. Yeah, the trade deal stuff has really taken a back seat to other things. I think the market really only cared about worst case scenarios. And now they're sort of like, okay, if we're going to settle, somewhere in the range of 10, 12% tariff rates, effective tariff rates into the US, that doesn't break the US economy. It doesn't break the US stock market. And so I think, people got overwhelmed with that stuff. They took it way too, if you remember, I was super bullish in the markets when the markets were panic selling, because in some ways it kind of was a Trump trade, but it also was kind of a look, people like Trump, people don't like Trump. Putting that to the side, when the market reacted like this, my thought was the market is over panicking, overly terrified, and that Trump and team are going to see this and they're going to say, "Oh, okay, fine, we'll negotiate." I made that prediction, and I was very right. Not necessarily right in the timing, though. I was actually, I kind of was, I kind of wasn't. I started buying stocks over here, bought more, and I bought heavily towards the low end. I did really well this year. My account is up 25% this year, largely because I made that play in some of the individual stocks that I bought. And then I traded the Russell long for some time. I have since been trailed out, and so I'm missing this last leg a little bit. But this was really a lot of the outperformance this year for me. I was long gold into all of the tariff uncertainty because I thought it would spook the market. I was correct about that. And then I was buying stocks, and I did really well with that. Now, let me be completely fair, right? I'm pointing out where I was right. Where I've not been so right is recently I've been really cautious on stocks, and there has been a continued leg higher. So I've not missed this completely because I still own a bunch of stocks and I'm not short the stock market. But in this recent leg, I have missed some of the potential gains had I just held on to my positioning from those lows. So please understand, I'm pointing out where I was very right and where I made, a substantial amount of returns this year was this sell-off. I did really well calling that not necessarily the bottom, but right around quote unquote Liberation Day, I bought the heck out of stocks, and I did really well with that. Where I've not done so well is in the last recent leg higher. I've been really cautious on stocks due to the labor market. And so I've missed a little bit of this move, right? So there's my full spiel. Overall this year, I'm doing really well. It's been a really, really good trading year for me. And last year was a pretty good year for me as well. So I've had a good stretch. I do remain, and here's the thing, right? So I am not bearish on stocks. I do not want to make a call that I think that they are going to go lower from here. But you are talking about some really stretched valuations. You're talking about very high expectations for stocks. And this is a very rare level of strength in the stock market. We are talking about really high conviction to the upside. People are very, very much chasing this thing. And so could it continue? Sure could. I'll show you something too that might be interesting to you guys, is if we actually go just take a look at some sentiment here. This is a case for why I think the stock market can actually keep going, right? Part of the reason the stock market can keep going higher is because it's not like we are like crowd sentiment is overtly bullish. We actually have a really mixed reading here when it comes to investor sentiment. So specifically what I mean by this is if we look at the AAII Investor Sentiment Survey, it is a weekly published survey that came out yesterday, Wednesday night. We have this data here, which shows us there is sort of an equal bullish to bearish ratio. If we scroll down, we built these charts to make this a little bit easier, and I should widen these out. Let's see if we can do that really quick. I'm just going to, on the style side, see if I can just make this a little thicker here for us. Boom, boom, boom. Give me a second here, and then we are going to reset this. And there you go, a little bit thicker. Thick with two C's, right? Anyways, bullish sentiment here rose in the latest filing, and bearish sentiment slightly contracted. So we do see a little bit of bullish sentiment starting to form, but it's not significantly outweighing. I mean, they're pretty much even, right? You have bulls, you have bears, sort of mixed. Now, what that tells me is that you could still have more upside in stocks because you don't have such a massive concentration of everyone is bullish, right? There's room for the bears to swing to the bullish side and for this to expand higher. What that typically coincides with is price action moving higher, right? When the stock market starts running higher for long enough, the bears give it in, they throw in the towel and they say, all right, I'm going long, right? So that's not going to be me. I cannot justify with my strategy, with my approach, chasing stocks at these levels. Now, I would not mind potentially picking up some stocks on the long side if you were to get a pullback, but we don't sit around holding our breath here for pullbacks. This thing could keep going for a couple weeks, right? I do think you probably will get some pullbacks. You'll get some dip opportunities, in which case there's some better risk to reward. But you look at SPX, you look at NAS. I mean, NAS is a beautiful pullback trade. I actually think, I could be wrong, but I believe we may be getting, nope, not yet. So we flickered yesterday. We had a slight increase in score for the NASDAQ. But I want to look, so crowd sentiment, as I just got done explaining, is pretty mixed. That has room to go in either direction. You could get people more bearish, keep people more bullish. I like to be bullish. This is not a prerequisite for every single trade that I take, but I like to be bullish when I see this sentiment really bearish, right? That was where earlier this year I did really well. Crowd sentiment was super bearish, and there was so much room to surprise to the upside, and that's exactly what happened. Now we have a little bit more of a mixed sentiment, but there's still a lot of bears in the room. So that tells me there is potentially more room to the upside. Let's look at the put to call ratio, because this might also be interesting. Watch how this took place. On Fed Day, there was significant put buying that went on. Okay, what you're looking at, if you are new to the show, if you're new to the channel, we're looking at some sentiment indicators to see what the crowd is thinking about the stock market, about the indices. We can also look at gold and dollar, etc. Okay, so SPX, there was huge call demand right on Fed Day. Is anybody surprised by that? I'm sorry, there was huge put demand. I'm not sure if I said that correctly. There was huge put demand on Fed Day, right? One day later, the crowd got so bullish that they swung all the way to the opposite extreme, to extreme call buying. So when this chart goes up, there's a lot of put demand. When this chart goes down, there's a lot of call demand. So in the last, 24 hours, the crowd went crazy like a kid in a candy store buying calls on the stock market. Okay. So what does that mean? Well, we just had a rush, a chase into the NASDAQ to the S&P 500, and bulls on the short time frames have been really rewarded for that. I mean, and the long time frames, right? Bulls are just killing it this year. But now that we're getting stretched in terms of call demand, that signals to me you could have just a short term topping out. Not going to try and short that, right? Because that's not a reason to time this per se. But I think the incredible high demand for calls has recently been pretty good indicator or timing of a short term top. Okay. So short term, I think you could get a pullback. Again, not shorting it. I don't short uptrends. I don't short bull markets, right? That's just not what I do. It's a really hard trade to time that. If you wanted to be short the S&P 500 and the NASDAQ, for me, it would have to look like this. You'd have to have macro data looking rough, right? which there's been some material improvement, retail sales numbers, GDP growth, some PMI data, unemployment claims. Like there's been some good data points to go alongside the weakening jobs data. If you were to see a failure of support around here, then if the macro still looked bearish, that would be a potential short. But there's nothing that's going to get me to short this market in a super strong upward trend, right? It's just a very tricky trade to try and time. Dollar index, again, following through from the last few days. This came as a surprise to many because, hey, the Fed cut rates. Why is the dollar going up? I said this yesterday. I'll say it again today. Remember, the market looks ahead. The market doesn't trade on what happens today. The market trades based on what is expected in the future. And so going into the Fed meeting, everyone said, Fed's going to cut rates. Fed's going to cut rates. What the market's now trading on is, okay, well, the Fed's cutting rates, but we had a good unemployment claims data point, and we also, have a mixed Federal Reserve that also suggests like, hey, we still have inflationary pressures. Powell sounded just a little bit more hawkish than I think people expected him to. So my point is, I think the dollar is sort of just snapping back. It's a little bit of a pullback here. I don't necessarily think the dollar has significant upside from here. But I think that this bounce is justified. If I look at the economic data on the US dollar, first of all, we were oversold, right? You just had this downward trend, consolidation. We tagged these lows, right? Came down to a key level of support. We were due for a bounce. I know I'm speaking in hindsight, right? But I did say yesterday, I think the dollar can continue this bounce. I would not be surprised if the dollar even continued further. I'll show you why. If I look at the economic heat map, US dollar went from like a really, really low reading on the Edgefinder's economic heat map to improving a little bit from the retail sales numbers that came in better than expected. So the consumer went out and spent money. That was a strong signal for the dollar bullishness. And then jobless claims yesterday actually were good, right? Jobless claims, let me show you that because I think like it might have gotten lost a little bit in the flurry of all the data that's been hitting us. This was good, guys. So unemployment claims last week freaked a lot of people out, myself included. I was like, okay, whoa, we just had a significant jump in unemployment claims. But to combat that, this week, we had a good unemployment claims print. We dropped not just down from where we were last week, but also below forecasts. I know it may be a little hard to see on your screen, but these red dots that we've got programmed in here are the forecasted data points from economists. So we came in lower than forecast. Those were healthy unemployment claims that came in this week, which sort of counterbalanced the concerns that we had from last week. So again, if we're studying the macro here, the dollar sort of had a pretty good week, to be completely honest, like a completely fair bounce here. Now, do I think that this has sustainable long-term upward trend for the dollar baked into it or potentially for it? Not quite. I'm open to it. I'm not a perma bear or perma bull when it comes to dollar. It's really just about the data for me. And I track this data through the economic heat map. So if this heat map starts to show, look, dollar looks strong. Like, let me give you an example. Let's say that we get start of October. Let's say NFP beats expectations, ADP. Like, look, I have these biases, but what I love, and I cannot emphasize this enough, what I love about the Edgefinder, like straight up, transparently, I'm trying to sell you this thing. You should buy it. But what I love about it is exactly what we're talking about here. We have a systematic way to look at this data and say, show me what the data is telling me. I don't want to like bring my bias into this. Like, just because I've been bearish, like how many times have you been like, I think gold is going to go down, and all the facts are telling you it's going to go up. All the data, all the trend, all the price action is telling you it's going to go up. But because you have been wanting it to go down, you continue to tell yourself it's got to go down, right? I cannot overstate how important systematizing your approach to trading is. It takes the guesswork and it takes the bias and it takes the gut feeling out of your trading, right? Just got a copy of the Edge Finder. Thanks for the wonderful offer. You're very welcome. FX James in the house says, yes, buy it. Like I'm telling you, yesterday I made this comment. Yesterday, someone commented on my thing. They're like, Nick, your channel is really just a funnel to sell copies of the Edge Finder. And I'm like, you hit it right. You hit the nail right on the head. Like I don't know how else to say it. I say it all the time. My channel is the whole purpose of my channel. Like I love trading. I love investing, but it is a business here. And a good business shows you the results that it is able to produce to help generate for people before you choose to buy the product. Now, of course, I can't guarantee you anything in terms of trading results because people make really silly mistakes and dumb decisions. But I can tell you that if you are trying to improve your outlook on fundamentals, your macro, have the data in front of you, because that's what's going to make the difference. Even if it's not with our tool, like you have to have a system to scan this stuff. There is no alternative. Like you can't do this stuff in your head. You can't read Wall Street Journal every day and come away with a comprehensive, mapped out economic kind of understanding, right? You have to have data in front of you. So that's why I say you absolutely should buy a copy of the Edge Finder. It is absolutely a sales pitch, and it's a product worth every single penny. Boom. It's capitalism 101. It is straight up capitalism. Capitalism is the idea that you help a customer and they help you by purchasing it because it's worth it. That is straight up what we're doing here. Like the other thing is I show trading results frequently because it bolsters the case that I'm making. Like I'm not just talking nonsense. This is stuff that I genuinely have found to be incredibly useful in my own trading. And I think most retail traders completely miss it. Like most retail traders, they have trading view, they put technical charts on their screen, and that's about it. So again, that is what I'm trying to express. There is no secret. Nick, what's your plan for next week? Yeah, so to be honest, I have a lot of like ideas in markets, but not a lot of pullbacks to work with. So like gold, I'd buy it if we got a dip. In fact, I'll show you what my plan is. It is, again, going off of my systematic approach. Actually, gold lost its bullish reading. This is the first time I'm seeing this. Let me just look at metals really quick. Oh, wait, no, it isn't. It's on there. Okay. Let me just refresh this because it looks like. So we had some better than expected readings. Gold is holding on barely to its bullish reading. Actually, today will be really interesting because at the end of today, we do get institutional positioning changes from the commitment of traders data. So we'll see if they bought more gold, if they sold gold. Last week, they bought gold pretty heavily. Let's see if they do it again. I'm curious because if institutions came in and sold this, if they took some profits off the table, we could see a little bit of a pullback in gold, which I would welcome. Also, really quick, guys, if you are not already in our Telegram channel, I get this question all the time. Fundamentals, I totally understand. They are a mountain to try and climb and trying to figure out, right? It's a lot of work to learn how to understand fundamentals and macro. And I think the biggest reason that traders, transparently, I think the real reason traders are so unwilling to look at fundamentals and macro data is because it's complicated. It's hard. It's not an easy thing to learn. But if you listen, I say this all the time, if you listen to professional money managers and some of the greatest traders of history, you'll catch on to something that they typically talk about, which is the Fed, the economy, the business cycle that we're currently in, secular trends like AI, or in the 1900s, it was electricity or the internet, right? These themes that can take over markets. They are really powerful forces. And so I'm a big advocate for using macro, using the fundamentals, using the real world to help decipher what's going to potentially happen next in markets. If you are interested, and maybe we could change the QR code here if you guys want to scan this. If you're interested in getting access to our free Telegram channel, it's the quickest way, a free way to start learning fundamental analysis every single day. So scan the QR code right below here, or it's in our live stream chat if that is easier for you. But let me just show you. why I'm so excited about this. First of all, we had like 800 people join us this week, which is amazing. So we have a writer here behind the scenes at A1 who's doing an excellent job putting together fundamental breakdowns every single day for you guys. We're covering the dollar, we're covering gold, we're tracking the latest. So this is a daily read, like a 1-minute read that can keep you up to date on fundamentals so that you don't necessarily have to make every stream, but you can stay up to date with it. Take a second, scan the QR code if you're watching on a TV or somewhere where it's easier for you on your phone, or click the link in the chat. Join us in the Telegram and start learning fundamentals for free. It's a great way to do it. So stock market is about to open up in 5 minutes. We'll see how that plays out here today. See if we get some follow through to the upside. It has been just a nonstop upward trend here for stocks in general. Just waiting patience. So in terms of setups for next week, I did take a trade yesterday. I went long the Australian dollar against the Canadian dollar at these levels. This was an edge finder setup, specifically on the economic data tab. Aussie CAD, when comparing the two, got a nice overall +5 score on the economic only tab, which is what I personally prefer to look at for currencies. I look really it's a little bit longer term what I do in currency world. And I do think the Australian dollar against the Canadian dollar is potentially breaking out, retesting this area. I think we could be headed on a bigger theme back higher. The Australian dollar is a little bit more on the hawkish side, whereas the Bank of Canada, a little bit more on the dovish side, and some of the data suggests it. So let me show you, right? So if I'm going to make a trade, I think it's important that we defend the trades that we're putting on. So if I'm looking at like Australia, right? GDP growth came in better than expected. Manufacturing PMIs came in strong. Services PMIs came in strong. Retail sales numbers came in strong. Inflation came in a little bit lower, so that's weak for the Australian dollar. If we take a look at unemployment rate, they've got 4.2% unemployment rate. That is pretty low compared to other G7 nations. And then we look at Canada, and we say, okay, so most of the data suggests bearishness here. They had lower than expected inflation print, 1.9% inflation. They're probably going to keep cutting interest rates, especially with a 7.1% surprise to the upside unemployment rate. So unemployment rate is rising in Canada. Growth is negative. You have all these things and you say, okay, Canadian dollar does not look super attractive. So for trades, I look at the Australian dollar versus the Canadian dollar, and this to me is a buy. Now, again, I am longer term in my FX approach. I would also be interested in buying the Australian dollar versus the CAD if it moved lower. So it's a bit of a dollar cost. Well, it isn't a dollar cost averaging approach. I have a very small size on here. If it does dip further, give me a chance to pick up some more Aussie CAD on the long side. And this is, again, a theme that I'm looking to play into, and we'll see how it goes. It's just spot long on Aussie CAD with 10,000x leverage. Don't do that. When I say I have a small position, I am talking about a tiny position. Like I dipped my feet with this first trade. If it dips further, I'll get long again. If it dips further, I'll get long again. As long as the fundamentals still look good, these are levels where I could leg into the trade and look for a bigger theme move to the upside. So that is my current bias. Could change. And if it does, then I'll look to exit the position. Guys, up next, we're going to have James here joining the stream, taking over for a little bit. But before we do that, let me just remind you guys, I mentioned it a second ago, but if you have not already joined our free to join Telegram channel, you can do so. Again, you got the link right below me here, the QR code, or you can click the link in the chat if that is easier for you. Join us for those free fundamental analysis updates. And of course, we will keep you up to date on the latest here. Check out this, by the way. This is kind of cool. We got our new up next on the screen. See that? You got FX James coming up next. A little bit of a preview there. Yeah, we got James coming up in just a second. We'll go ahead and roll a quick break, get that set up for you guys. Don't go anywhere. James can be taking a look at some more trading setups for your Friday trading session. Stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
The Fed, we've had the Bank of Japan, we've had news out for the UK as well. Yeah, it's been a busy week. So for anyone that has either broken even or made a profit this week, give yourself a pat on the back, because it's definitely been a bit choppy, to say the least. Ballout says, when I get the chance, grab a David off Winston Churchill late hour and let me know what you think. It sounds like a cigar. I'm not 100% sure. Not well educated in that field. Anyway, I decided to go on a little bit of a buying spree this morning. So yesterday I was saying that I'm going to sit flat until Monday. I lied. I did take some positions. So I'm not going to show you the Euro Aussie because it's still at entry. So I'm going to leave that one. We've got a long position here on the S&P. This is a bit more of a long-term trade. There's not a take profit set, but we're just going to see if we can ride the wave on this one. I decided to re-enter into the JPN 225 or the Nikkei, which is the Japanese market. I already had a really nice trade on that earlier this week, so I'm looking to see if we can continue the ride up on the on the back of the drop that we had from the Bank of Japan. There wasn't really any developments there from what I've seen. I've not looked into it fully. I did have a look at the headlines though, and it doesn't seem like there was anything noteworthy that would sway the Nikkei to start trending to the downside or to ruin the idea. Now, I've taken a little bit of a different approach with some of these ones, which is silver, dollar yen, and dollar Swiss. So I was also yesterday looking through some reports from institutions, basically just on their view on what happened with the Fed and the dollar and what their projections are. Overall, their consensus, and this is coming from places like ING, Goldman Sachs, HSBC, JP Morgan, London Stock Exchange Group, etc. The general idea that they all seem to have in common is that the dollar will be stronger in the near term as we see the thought process of aggressive, or the pricing of aggressive easing getting taken out of the markets. However, in the sort of longer medium term, we could see the dollar still get pressured to the downside as we do continue the rate cuts, but at a slower pace. So I've positioned myself short dollar on the dollar yen and the dollar Swiss. Now you'll notice very, very small position size. It's only 0.03 on dollar Swiss, and dollar yen's only a 0.02. Now the idea is to potentially get dollar yen down to 142, which is the Goldman Sachs and who else is there? Goldman Sachs and Nomura Research both have targets down there. So in theory, it's basically just dollar cost averaging in. So I'm just looking to shorts. Now the downside of this is the swaps. I am paying swaps. So if this trade doesn't start to work out within the next couple of weeks, I will have to cut it and look to reposition. Obviously, I don't want to be paying to hold a trade in drawdown. So I will have to closely monitor it. But of course, that's why it's a low position size. I also decided to take a long position on silver. I think I mentioned this yesterday, but I couldn't show you the entry because my internet cut out before stream, and I needed to log into the broker. But this is the entry I took. Again, very small position because I'm looking to basically just buy all the dips I can on silver. I'll be perfectly honest, it was a little bit of a FOMO decision. And obviously, that's not a professional approach, but it is what it is. I still think silver is a great opportunity to be a buyer. I missed all of the run on silver this year. Some people may remember I was a big advocate for silver to go to $40 back in sort of the start of 2025. Did I take it? No, I completely missed it. So now I'm still thinking silver could go towards 44 to 50. So I'm positioning for that. So again, very small position size, and on dips, I'll just continue to buy. I think silver long term, when I say long term, I mean over the next couple of years, I think still has a great opportunity to gain value, especially with its industrial use. I'm also in a couple of stocks, but I don't talk about stocks. These are long-term positions and limit orders and things. So I won't go into the stocks and all that stuff because I don't really know what I'm talking about. It was from a colleague of mine. Nat gas. Yeah, nat gas does look quite good. I'm still paying attention to nat gas, but I'm standing firm on the idea that I just want to wait until closer to the end of the year. I just want to see if we can get slightly closer to, let's say, 2.6-ish in that sort of price zone. Then I might look to be or look to accumulate some nat gas positions. Basil, you missed me. I appreciate it, but I haven't been anywhere. I've been on for the past 2 or 3 weeks straight now, I think. I'm sober, but I love Davidoffs. They're like 25 euros a piece. I don't think I've ever had one. Don't sell here. Wait for this. Wait for the sell startup when it breaks 149.15, otherwise swaps will hurt. Yeah, I mean the swap. Excuse me. The swaps won't be too bad. Again, it's a very small position. It's just dipping my toes in the water, so I can build up a position as time goes on. So the swaps won't be too much of an issue. Obviously, it's not ideal either way, but yeah, I'm more looking to get a position up here around 150.7. That would be perfect because I would come and retest the high, and I think we would see fresh sellers start stepping in at that level as well. But yeah, to be honest, I don't really have any new views on the markets. I'm still pretty much on the same side I was yesterday in terms of I need to really do a bit more research this weekend and sort of reallocate, or not reallocate, it's not the right word, dive into what I want to be involved with, because I saw Nick talking about the Australian dollar CAD before I came on. I did have a really, really nice, a really, really strong bias to be a buyer of Australian dollar CAD. Now, I did lose money on it because I ended up buying the top typically. However, I'm just not sure I'm a fan of the Australian dollar right now. I still think the Canadian dollar is a great pick to be a seller. Canada's economy is just falling apart. I mean, I think Nick also showed you this, but I'm going to show you again. So the economics for Canada are absolutely dire, and I think we're still pretty. We're still not early. Early's not the right way of saying it because we're not early, but I still think there's further downside to come for the Canadian dollar. So I think being a seller is still a completely reasonable thing to do, but the problem I'm faced with now is what do I want to sell it against? And that's what I need to figure out, because things like dollar CAD, maybe you could be a buyer of dollar CAD short term, but longer term, probably not the best idea. Australian dollar CAD, I'm not too sure on the Australian dollar anymore either. So we'll see. We'll see. So I'll come back to you next week with, with some fresh ideas. Just stick the stupid CC machine in your face and ask, it's going to ask if you got a question. The credit card machine. What are you talking about, Bola? Oh, coffee shops here in the US ask for tips. No, thank you. Horrible customer service. Yeah, I know. When I was in Miami, it was a real reality shock when we went there. It was like everything was asking for a tip. It's like when I arrived at the airport, I went to Burger King at the Miami airport. And it was just, again, self-service, and it was asking if I want to leave a tip. Like, who am I tipping? Surely you should tip me for doing the job. You know, I don't get it. I don't like the tipping culture, and I'm fairly sure it's just down to the fact that the companies don't pay their employees properly. I could be wrong. I'm not well educated in that area. I don't really know what the whole situation is, but I don't like it either way. I went to, sorry, I'm trying to figure out what I want to say next. I went to Cheesecake Factory as well, and I left, I think it was a $15 tip. It wasn't that much, but it's what I had in cash, so I just left it. And we were sort of calculating. We heard a few other people leaving tips as well. And then we estimate, again, complete estimation, could be way off, but the server was on like 100,000 a year if it was right, obviously before taxes. I was like, well, maybe I should just be a server. Maybe I should I'll leave YouTube. I'll stop trading. I'll just go and work at Cheesecake Factory. Japan is great. They see tips as disrespectful. Yeah, I mean, I don't think it's disrespectful, but I tip in the UK if I'm really impressed with the service. You know, if I get someone that is genuinely happy to be there, happy to serve, clearly enjoys the job, and makes the vibe better, and you know, I'll happily leave a tip, no problem at all. But I don't want to feel obligated to. Anyway, we need to talk about markets. We do this all the time. We get sidetracked and we end up talking about nonsense for half an hour. MHDY. What I want to sell XAU on 65. What do you see? Let's have a look. So you want to sell it pretty soon then, don't you? Let's see. Why would you want to sell it is my question. I understand you might think there's a dip coming, especially if we are expecting the dollar to maybe gain some short-term strength here. But I don't know. I wouldn't want to be a seller, to be quite honest. I think there's been many sellers in the gold market over the past couple of years. And I'm not sure how many of them have managed to turn a profit. Let me just say that. To be honest, I would wait really for a slightly larger pullback, maybe towards 3525 might be quite reasonable, and then look to be a buyer. Selling it obviously could work, but I think it's very risky. It's like trying to time a bullet. Here in Pakistan, the waiter only earns through tips. The restaurant doesn't pay them. What? It's basically voluntary work then, isn't it? Fallout feels passionately about the tips. Anyway, so yeah, I think the main thing really about the dollar right now is, are we going to break this trend? Because it's going to take something relatively severe, I think, for us to see this trend line break. Bearing in mind, it's been active since 2011. Now, it's failed multiple times. It's failed twice here. I'd say it's also failed here to even meet the trend. It's failed twice here. It's also failed another 2 times here. What is it going to take for the dollar to break below and start heading towards, I guess first up would be 95. Now, in my opinion, it's not just going to break because of a slow rate cutting cycle. I think we would have to see the SEP come into play. So I think I might have shown this yesterday, but I'm going to show it again because it's very, very useful. Well, kind of. Powell was called out on it for not being accurate, but anyway. So growth is expected to increase. Obviously, GDP is meant to go from 1.6, 1.8, 1.9, and then slow down in 2028. But what I'm more interested in is the unemployment rate and the inflation rate, or sorry, PCE inflation, core inflation, and unemployment rate. All of them are supposed to tick down. Obviously, the dot plot also suggests that we are going to see more rate cuts. So I'm now just thinking we're going to see the dollar, I think, start to melt below. Well, maybe not melt, that's not the right word. Come below and start testing 95 if we start seeing signs that inflation is cooling and the labor market is possibly cooling even further, a bit more aggressively than maybe the Fed would have expected. And that, in turn, might give us that more aggressive easing cycle that I think some people were expecting. But yeah, for now, just playing it safe. Long on the indices. I was long on US 30 as well, actually, here. Luckily, got out quite actually, yeah, I got quite a good exit here. So you can see I actually only closed it just to manage exposure into New York. So I've got the Nikkei and the S&P trade open. So I didn't want to have all 3 open for too long. So I bought here and then closed out here. So I also bought here as well. So I had an average price here. But yeah, I managed to get a pretty good exit there. But yeah, that's kind of it. Nothing interesting is going on my side of the markets, really. Giraffe. Yeah, I like my wallpaper. It takes me away from my professional things. I know on this stream I probably don't seem very professional to some of you, but I do have to take care of some serious things now and again. So when I'm done or I'm starting up for the day, I see a giraffe and it makes me smile. I'm late. You probably talked about it, but will GBP USD drop even lower to the recent support? I'm not sure. I was considering pound dollar, and there was I think it was Nomura. Hold on, let me just pull up the chart first before I start complicating things. Here, so where is the next support? Is what I'm wondering. What price are you sort of thinking? I assume you mean around here, sort of 1.34. Absolutely could. However, I think we are ready for a pullback now on some of these dollar crosses. So let me just see. I don't know if I've got it actually. Bear with me for a second. There was a report that came out from, first it was Nomura saying they're selling the pound dollar. I think I deleted it. I don't have it anymore. But yeah, so there are some institutions that are pivoting to long dollar, obviously shorting the pound dollar, mainly banking on the idea that the dollar is going to have a rebound. But the main theory behind the pound dollar short is the poor data that's coming out of the UK. And I'll be honest, I'm actually not sure what's going on with the UK right now. I've not been paying attention. So something I need to look into this weekend. So I would be looking to be a seller. However, not right now. So I would be looking for a 50% retracement, something like this. And then, yes, possibly selling into maybe this level here. So between, let's say, 1323 to 131, I think is quite reasonable. Looking to fade ES today and day trade before the weekend. Nice. I'm fairly sure we've had quite a good week on the indices markets. Haven't they all gone to new all-time highs? So yeah, I mean, a fade could play out if we see some profit taking through New York. Second day play, high chance of dropping. Aaron, are you talking about pound dollar or ES? Have I gone through gold? We did briefly talk about gold, but there's just not really anything to do with gold. It's, where is it? Here. It's in a situation where I suppose you could potentially buy it here if you wanted to basically do what I'm doing with silver, which is a DCA, just layer in some small positions. However, I would really want to pick up some gold if we could come down towards the 200 moving average on the H4, which is around 3,500-ish. I think that would be a good level to potentially have a first entry. Then beyond that, if we see a deeper pullback, I'd be looking to be a buyer off these previous highs right here. I think that'd be a really nice place to buy. But yeah, right now, I'm struggling to justify really anything on gold. And I've been saying that for a very long time, and that's always led to me missing these rallies. So it's been unfortunate, but there you go. I've kind of fumbled the bag on gold this year. I can't lie. CAD yen potential upside. Yes. I think, was it yesterday we spoke about the yen, or we touched on the yen, and I said that although I'm about a year late on the yen bull idea, maybe even longer, but I am starting to favor sort of the long idea here. Oh wait, hold on, sorry, you said CAD yen. I read that as Swiss yen. CAD yen, I've got less conviction, because although I'm not necessarily bullish on the yen, I think the yen's okay. It's in an okay place. Mainly from the Bank of Japan side, there wasn't any huge concerns. There wasn't anything that was a big red flag to me. It was more just data dependent, hold rates, blah blah blah, standard stuff. So it doesn't lead me really to saying, oh, I need to buy the yen or I need to sell the yen based on that. So it leaves me basically where I was in terms of, yes, I would more edge to selling yen, but not massively. But on the other hand, I am very bearish on Canadian dollar. So I would prefer to be a seller in this market. Now, that might not work out, but that is where my brain is leading me right now. However, the opposite applies when we go to something like Swiss yen, Aussie yen, those other markets. Yes, possibly going long is a pretty good idea, I would say. So we've just broken the previous all-time highs here. We've just broken the triple top, and it looks like we're currently having a bit of a retest of this level. So because it's Friday, I wouldn't be looking to buy this market here. I would wait to see one of two situations. Either this is a retest and we go higher. In that case, cool, we could probably buy on Monday. If not, and we end up coming back down, I would like to see a rejection of this 200 moving average, then a continuation higher. And again, I would probably be a buyer in that situation as well. So it's just a case of seeing what happens between now and Monday or Tuesday or whenever we see that sort of reaction. Fumbling a golf girl is worse. Can't relate. I got mine. GJ trade cooking up. Which way, OT? What are you looking for on GJ? Or are you already in? I've got about 10 minutes left, and then we have, I think it's Marco coming up after me. Long GJ. Let me just consult the Edge Finder. Hold on. Again, I've not really looked into the UK recently, so I'm not sure. All I've seen is Bloomberg notifications coming through about the UK. I've not read any of them, which is poor performance on my part. I'm slacking on that, but I know something happened. So if anyone knows, drop it in the chat because, yeah, I'm not 100% sure. However, on the Edge Finder, we are getting a bullish reading, so I will take it at face value for now. And I suppose, yeah, actually I don't mind it, given the fact that I'm not aware of what's actually going on with the UK at this current time. So we've got a bullish trend. The Edge Finder is bullish on the pound. So to be honest, this looks relatively good. So we're coming down to the 200 moving average, indicating that we could be buying the dip. As long as we see this trend continue higher and just continue this sort of horrible range drift into the upside, I think pretty good. Fix your Discord messages. Ball out. I'm going to put, hold on. All right. I've just opened my DMs on Discord and I'll leave it there. So I remember to do it after the stream. The thing is that when I'm done with streams, I normally just get straight off the computer and go do something else for half an hour. So I completely forget to do anything after. You think JPY is going to get stronger? So do I, but maybe not right now. I think we need to wait for indications that the Bank of Japan is going to start hiking rates. Until then, I think it's going to remain subdued. Yeah, I suppose the dollar weakness can feed into yen strength, but we're not seeing that right now. Obviously, the dollar is strengthening. So when the Fed start cutting rates and we get the BOJ hiking rates, that's going to be a beautiful dual inflow into the yen. We won't long the yen till there's no more political instability. That is a good decision as well. The 10-year bond yields are up 3% today. Are they? Interesting. Yeah, excuse me. Again, I was looking into what happened last night with their rate decision. Didn't look into it in too much detail, so I can't speak on it that much. But I know from what I read, it was pretty bog standard, boring. Yeah, nothing's happening. Remain data dependent, although they sounded relatively optimistic. Okay, so I don't think there's anything else to discuss. It seems like these dollar trades are going to play around for a little while. Silver's doing okay. Nikkei is fine. S&P is doing a nice little push. So yeah, we're cool. How's New York open? Let's have a quick look-see. Yeah, New York opened about half an hour ago-ish. Yeah, Dow's up, Nasdaq's up. So it seems like, yeah, quite a nice opening. That's good. It's a nice way to end the Friday or end the week. So yeah, I'm just thinking, what could we expect with the dollar? Well, sorry, I already know what I expect with the dollar. Whether it's going to happen or not is a different story. But it's more the time horizon. How long are we going to see the dollar catch a bid until we start seeing it get pressured again from future rate cuts? Or rate cut expectations, I should say. Who knows? I hate how good entries always come on a Friday. Yeah, that does happen. Normally, in that case, I'll wait till Monday. Depends on time frame. If it's like a 15-minute time frame, probably not, because obviously it'll be gone by Monday. But if it's on the H4, the daily, just wait till Monday. What's the Friday plans? Nothing tonight. I've got no takeaway or takeout for the Americans. No pub for the British people. Got nothing going on. I think I'm going to have some salmon and asparagus. My girlfriend's going to cook me a meal, because I'm such a hard-working boyfriend. But no, I really nothing planned. I've got a very boring weekend ahead, I think. Need to get Milo introduced to more of the house. He's currently in the living room. It's like his little base at the minute, so we need to get him a bit more comfortable around the rest of the house and with our other cat. But that's it. Life of a trader. No private jets and clubs and champagne, unfortunately, this weekend. Okay, right. So Australian dollar CAD is on the maybe list. I like the idea, but I'm not 100% confident just yet, as I was. Australian dollar yen, maybe. Again, I'm just not set on the Australian dollar at this time. So I just need to refresh my research on that one. CAD, I'm still in big favor of being a seller of CAD. So I think if we can get CAD yen to show a little bit more of a bearish behavior, I think I'll jump in. Again, probably next week, maybe Monday or Tuesday. Swiss yen, I'm looking to be a buyer. Euro CAD, I don't really have anything. I think leaning towards being a buyer of Euro CAD is probably the best decision. But I'm not really a fan of the euro right now either, to be honest. As a day trader, I don't hold trades on weekend because weekend gaps cause unnecessary risk. Yeah, I think that's a good idea. Day trading over the weekends, yeah, not good. What's up with gold? What do you mean, what's up with gold? I mean, the price is up, but I'm not sure what you mean, what's up with gold. It's just sideways, really, at the minute. Okay, so I've got around 4 minutes left on my segment. Then we've got Marco coming to take over the show. So if there's any questions for me specifically, let me know. If not, I'm sure Marco can cover it for you or with you. Last time I was short in New Zealand yen and held it through weekend. Japan PM resigned. Oh, that's tough. It's always the way. I remember it got to a point with Trump, and I can't remember the exact time. It was around earlier in the year. I'd say around June. Some of you guys may remember when Trump was just tweeting on weekends and moving markets. It got to the point where I became a little bit worried about placing trades. Not because of the, when I say worried about placing trades, not the risk on the trade. It's just, you could place the trade and the theory was, could have been very good. And then Trump tweets something about tariffs and your trade's just gone. It's like 30 seconds to stop loss. If that, you're lucky if you got 30 seconds. I don't think I actually got caught in anything too bad, but it was a concern I had. Shorting CJ. When you say, CAD, okay. Makes more sense because CAD is very weak. Yeah, I completely agree. Is silver going down? Silver might be dropping temporarily, but I'm still still in big favor. It's actually not going down. It's doing quite well today. Having a little push here. I'm up almost 60 ticks, which is good. You guys always check the high time frames. I suspect you don't like scalping. I do scalp, actually. I trade the London Open on the DAX, so I trade a breakout strategy there. I trade New York sometimes. However, I don't trade it that often because I'm on these streams 3 days. It's 3 days out of 5. But yeah, it's the same strategy. So I do scalp, but definitely not as much as I swing trade. Public sector net borrowing has risen very sharply. That was news today. I haven't paid attention to the news today, I'll be honest. I'm kind of in weekend brain right now. I placed my positions this morning. I've done what I need to do, so I'm kind of clocked out for the time being. When does COT data position come out? It should be out either today or Monday. If you're using the Edge Finder, of course. I'm not sure what platform you use. It should be the Edge Finder if it's not. I'm still moving to Bangkok. Oh, fuck it. I don't know, to be honest. I was talking about this the other day. I'm not sure what I'm going to do, to be honest. I don't know. We'll see. I'm still moving somewhere, but I don't know. It's wherever the wind takes me, to be honest. I think there's the beauty of what I do. I don't have to be anywhere. So, I'll just go wherever I need to be, or wherever I want to be. The only downside is I'm going to lose my setup. So it's going to be more difficult to stream, but I'll have to deal with it. I got into scalping gold. Any tips? Not really, to be honest. I've never scalped gold. The way I trade or the way I scalp is just momentum. So I'll wait for the session open. I'll wait for the breakout and I'll trade into the momentum, and that's it. It's very simple. I'll be honest, I don't know if gold behaves the same on session opens. Never really looked into it because I only have ever traded gold on higher time frames, like swing trading. Anyway, ladies and gentlemen, I'm 11 seconds over my time limit. So guys, have a good one. I really hope you enjoy your weekends. I hope you've all had a great week and made some profits, or at least broke even. That would be good as well. Stay safe, don't get margin called, and don't leave because you've got Marco coming up next. So guys, see you later. Thanks for having me as always.
Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello everyone, welcome to my segment of the stream. So I do hope everyone is doing well. Let me just turn on my second light. Okay, that should be a bit better. So what has been going on today? Well, in terms of activity, what I noticed is Euro Pound is moving higher. So the pound has been losing some value. If you check Euro GBP, if you check GBP USD, definitely a sell-off in the pound. Now, what happened? Well, we did have some, you can say, breaking news. If we go to here, so if you want to check out Financial Juice, absolutely free. You click on the market moving news, and you can see UK PSNB Bank's actual number was 17 billion and the previous number was 1 billion. So I put this into Grok AI, and it turns out that this is a very bearish signal for the pound, and you can see the reaction, a big sell-off on the pound. So this is pretty good for my current position. I do have a take profit set at 0.87370, so we will see if we can get into this trade. Now, right off the bat, or not get into this trade, but get out of this trade with a take profit. Now, right off the bat, what I do like is the Aussie CAD. Looks like it's going to hit my alert. Pretty much after I finish this stream, I will most likely place a buy limit right at this level. So that is going to be my trade idea. So somewhere here. And the stop loss, where can I put the stop? Let's see if we can find a significant level. Well, I don't want the stop loss to be too big, but I think I can put it below this low. So like this. And if I make the target, let's say this swing high, I can get a positive reward to risk. I usually like to aim for, let's say, 1.5 to 1 or 2 to 1. That's because my win rate is below 50%, around, I think, 45%. So you need to have a positive reward to risk. And this would be a pretty good trade idea. So I'm probably going to put this in. Will I get taken in? We will see. But I do think this is a nice area for a stop loss. Why do I like the Aussie CAD? Well, going long is actually positive swaps. So if you go into the Edge Finder and you type in Aussie CAD in the carry trade scanner, you're gonna see that. Okay, let's wait for it to load. You can see that the carry direction where you receive positive swaps is when you buy. And let me also open my MetaTrader because sometimes it's a bit different on my broker. So on my IC markets. So let me check that out. So we said Aussie CAD. Let's click on information. Yeah, so by going long, I do actually get paid positive swaps. And this would be more of a long-term setup. The idea behind it is CAD is very bearish. I've been talking about it for quite a long time, so I really, really don't like the CAD. I really want to short the CAD. I do have already USD CAD long. I have Euro CAD long, and I want to get into Aussie CAD because basically positive swaps, it's in a nice uptrend on the daily chart. We have kind of broken this level of resistance and are now retesting that level. And we just touched, or we're going to touch the 20 MA. So it looks pretty healthy. This is not going to be a massive position, so not like 1% risk, but maybe 0.25, just to add into the basket of shorting the Canadian dollar. So that's my pick for today in terms of taking trades. Now, I can run through the watch list, but let me first check out the comments that you guys have. So let's see it. Here comes Marco on his jet ski. Okay. Hey, Slugmeister. Hey, youngest millionaire. Euro pound hit TP after barely missing stop loss. It didn't hit the take profit for me. So I have my take profit set at as you can see, 87370. So it didn't hit it quite yet. Maybe it will, maybe it won't. It's pretty close. So hopefully we do actually move into it. Again, the euro right now is a pretty strong currency, while the pound is a pretty weak currency. We also had the rate cut this week. So we had Bank of England. Where is it? Yeah, here, Bank of England. They didn't cut rates. They cut the rates for the CAD. But we had basically a central bank event, and the central bank does not know what to do at this point. What is the reason? I'm just going to run through the numbers. Well, if you look at the GDP, all over the place. If you look at the unemployment, it's really bad. So I think it's rising. See rising unemployment and actually inflation. I wanted to check out the inflation. So inflation is pretty bad. Rising inflation. Now that is what is known as a stagflation. Stagflationary period. Stagflation reduces the demand for the currency. So this is bearish for the GBP. Okay. So look at the sentiment of Euro CAD, 90% short. Why did you go long? I mean, CAD economy is weak, but also Euro. Well, I wouldn't say so. If you look at the long term for Europe, it looks healthier. Okay, it looks healthier. So look at the Euro, positive GDP. Now look at the CAD. All over the place. So then look at the unemployment for the Euro. It is in a downtrend. Now look at the unemployment for the CAD. Rising from 5.75 to 7.1. That is pretty crazy. Now look at inflation data. So Euro, around 2% on a downward spiral, possibly. For the CAD, it looks similar. It looks okay. So inflation, I wouldn't really put into this calculation, but just from the GDP and the labor market data, Euro is good, CAD is bad. Also, if you look at the housing prices for Canada, if you type into Grok or ChatGPT, you're going to see housing in Canada went up and now it's on a downtrend. Canada is highly reliant on housing prices. Okay, highly reliant on housing prices. And if houses are going down, if price of a house is going down, the demand for houses is going down. Thus, the economy in Canada is not doing well, and the CAD should go down with all of that. So, just if you look at all of the, let's say, numbers in the Canadian economy, it looks really bad. Euro looks okay. Do you have a favorite asset to trade? Well, I do like gold, to be honest, with these huge uptrends. So, and silver, I would say gold and silver I like a lot. So yeah, those are my, you can say, two favorite. I don't know, but I do like these uptrends. And I think it's pretty simple, pretty easy to get into these uptrends. Also, sorry, I wanted to take this opportunity, since we heavily went for the Edge Finder, to tell you guys, if you want to get the Edge Finder, you can do so with my discount code, which is MARKO. So there will be a link in the description of the stream, and you can get the Edge Finder. You can join the Discord, the A1 VIP Discord, and you can get a big discount using my code. So make sure to check it out. So in the Discord, you get trade signals, you get fundamental analysis, you get, basically, you can send me a DM, you can ask me a question, we can interact. So you get an inside look into my strategy and my trades. So let's continue. For today, I'm going to run through my watch list. I basically have the NASDAQ, which I don't want to waste a lot of time covering the NASDAQ, since the stock market has just decided to continue going to the upside. Both the S&P, it's all just going to the upside. So it looks very bullish. I can't do anything until there's a pullback. As far as gold and silver goes, so gold and silver, I want to buy, but we started to get a pullback on silver. It was 3% pullback, I think. Almost a 3% drop. And now it has basically recovered all of that. So the pullback was not as big as I wanted to see. I would have preferred to get in at this level of support. And for gold, I'm looking at 3,500. So not sure what will happen. If we do continue exploding up, I won't be able to get in. I don't want to chase the highs. If we do pull back, I will try to get into an initial buy setup. I think we are a bit overextended at these levels. Okay. What is interesting, even though the DXY is gaining value, so we had a quite nice of a bounce on the DXY, 3 consecutive up days, gold and silver still seem to be holding pretty strongly, especially silver. Let me also check the bond market. Okay, so TLT is down, yields are up, so that's a concern. The US administration wants to see price of bonds go up. Go up while the yields go down. Okay, that's what the US administration wants to see. So this is not the greatest, but everything is tradable. Euro dollar, I just have here because, I'm going to remove this one because I got taken out for a win. But so this one is a scratched trade. It's a done trade. Aussie CAD, as I mentioned, after the stream, I will be putting in a buy limit order. So hopefully I do get tagged in. Will I get tagged in today? I'm not sure. Maybe next week. So we still have just a couple of hours of the markets being open, but I do like this setup very much. We also commented already on Euro GBP, which is moving up. I want to get out. So I don't think this is going to explode to the upside. I don't think there's a lot more massive upside potential for the Euro GBP. But basically, hopefully it does move up a bit more. USD CAD. I really like USD CAD. I think a lot of people were short on the dollar. I think a lot of people were expecting the Fed to be dovish potentially have more rate cuts than expected, to maybe have even a 50 basis point cut in 2025. That didn't happen. You actually got Powell, who was hawkish. So he mentioned that they are not really ready to aggressively adjust the interest rate. And just from his tone, if you were listening to the press conference, which if you're a trader, you should have listened to the press conference, to be honest. It's really important to do it and to learn how to analyze what he's saying. So basically, it was a cut of 25 basis points, but Powell was hawkish. So the DXY started to gain value because the positioning overall was pretty heavily short on the dollar. And then the exact opposite thing happened. We started to move up. So USD CAD I still like quite a lot. I think we can continue going up. I am in a bit of a drawdown, but I almost got taken out actually. And this was Wednesday. So I thought we were going to just hit my stop loss during the interest rate event, but we didn't. So we bounced off. And now we sort of created this trend line. Can we say that we created a trend line? Well, kind of. You know, it's not a black and white thing, drawing trend lines. Everyone draws trend lines a bit differently, but as long as you can connect multiple points, you have some sort of a dynamic support level that you can rely on. So I think we bounced off of this level pretty nicely, and I would prefer to get out maybe at these highs. So if we can actually go to the upside, I would want to possibly close my position at 1.4, just below 1.4. You know, it's a key psychological level. There's a clear swing high right there. So we will see what will happen. This is a little bit of negative swaps trade, but it's not a big concern. Yeah, Euro CAD is okay, let's see. Food Station says, hi Marco, do you know if Tesla will drop to go in buying a call? Well, I don't know if anything will drop or go up for sure. I can only tell you about the probabilities. And to be honest, on Tesla, I don't have any information. I don't have any analysis. I don't analyze stocks closely. There was an explosion to the upside, which I didn't really spot. So we are quite close to the all-time highs. Yeah, so pretty nice. Will there be a drop? Well, we are kind of overextended, but then again, we can remain overextended. We can remain very far away from the 20 MA for a really long time, as you can see here. So just look at this period from here to here, where we were basically overextended and above the 20 MA. It lasted for 56 days. Okay, then also you have this period, which lasted for 64 days. So yeah, overextended on the daily chart is a term that can last for a very, very long time. What I want to say, EuroCAD. Yeah, EuroCAD I like because Europe, as I mentioned, we already kind of covered this trade. Europe is pretty strong. CAD is super weak. And what is pretty cool, the big investors, the big hedge funds, the pension funds, the big players, I don't think they're yet aware of the weakness that should be coming for the CAD. So I don't see a lot of huge selling for the CAD yet. I may be a bit early to the trade idea of just selling the CAD across the board and all over the place, but I do think it is worth the risk. So took a couple of stabs at it. We will see what will happen. This chart looks nice. It's generally in an uptrend, and we will see. I think this is also a bit negative swaps. Let's take a look. But it's not that significant. Euro CAD. Yeah, a bit negative swaps, but it's not much. So the interest difference is not huge. So Ballout says it was a forced cut by the president. Well, possibly. You know, the Fed seems to be more and more impacted by politics and by Trump and by the guy that he actually started to appoint. He actually started to appoint some how do you say it, members of the Fed who also work for the White House. I think that's the Miran guy. So Miran. I think that's the new employee of the Fed, and he's for sure going to be very, very dovish because that's what Trump wants the Fed to do. He wants them to cut rates. So maybe it was a influence from the president. Maybe they did the cut just to make Trump happy and just to make Trump shut up a bit. No one really knows. But what is important to take away is not the 25 basis point cut, but the forward guidance. And the forward guidance, the tonality of Powell was hawkish, a bit hawkish, more hawkish than expected. So that's what I would take away from that meeting. And I think a very good trade. Okay, we actually hit a trade alert. A very good thing, a very interesting trade idea for the DXY would be to actually buy it. Okay, so like going long USD CAD, maybe even buying USD yen short term. I have a trade on, which is just an experimental trade. I don't really want to share it in the Discord or talk about it too much, but yeah, I'm long USD yen short term. Okay, but I think we found support here for the DXY. I think the short position on the DXY was very overcrowded. Okay, I think there was too many people trying to sell, and you just don't have a catalyst for the dollar to go short. There was a massive catalyst, as I talked about. There was a massive catalyst at the beginning of 2025 where you had Trump, new politics, crazy tweets, tariffs. So people got scared. People started to sell US assets. Well, what's the catalyst for the dollar to lose value now? There isn't one. So you would not expect the big players, the hedge funds, the pension funds, the big banks, the big investors to sell dollars. Also, you have to note, selling dollar, selling USD yen, for example, is quite dangerous and quite expensive because you're paying 4% in swaps every single year. So if you're short on the dollar for 2 to 3 years, you're gonna lose a lot of money through swaps and through interest rates. Okay, so it's super expensive to go short on the dollar. US assets, US stocks are the best performers in the world. Every investor in the world wants to buy US stocks, and to buy US stocks, you need to first buy US dollars. So that, because all of these reasons, because of these macroeconomic reasons, I don't see a lot more downside for the US dollar. Also, during the dovish expectations, and we just had a rate cut, we didn't really move. Did we have a massive drop? Not really. So the US dollar seems to be very, very resilient, and I think buy setups on the dollar could be interesting right now. So so Yoshi says, hi Marco, how do you deal with losses psychologically? Well, if I know that it's tough, they can ruin your day. I know when I was starting to trade and I took a loss, I was probably going to feel bad for the rest of the day. It still happens sometimes, but as you take more trades and if you know that you follow your plan, it gets easier. So the feeling never quite goes away. It's a bad feeling and it's kind of a depressing feeling. But with time, you get used to it and you can recognize it and you can quickly correct yourself to get out of that sort of depressed state, if it makes sense. So the best cure is just exposure. It's just experience. As with anything that you're struggling with, the more experience that you have, the more times that you go through it, the easier it gets. So there's no cure, there's no magic pill that is just gonna erase the psychological impact of losses, but with exposure, it gets a lot easier. So I do want to take this time to mention the sponsor of today's video, which is going to be DNA Funded. Okay, so if you guys are looking for a prop firm, you want to expand your capital, you want to start a challenge, I highly recommend you guys check out DNA Funded. This is a challenge I have running. It's a 50K two-phase challenge, and you can use our discount code, especially for the stream viewers, and the code is A1Live. It gets you 25% off any challenge of DNA Funded. So A1Live, 25% off. exclusively for you guys that are watching right now. So for this specific challenge, I'm testing my ChatGPT signals. It's currently down a bit. 2 trades open, both are in a little bit of profit, so we will see what will happen. But yeah, so far pretty interesting, and that's about it. Of course, disclaimer, if you don't have a trading edge, if you have not proven to yourself in live testing and in live trading that you can make money, funded challenges are not for you. You're just going to throw money away. So until you have a proven trading edge and until you have live tested your strategy, don't buy a challenge. Back testing is cool. Back testing works, but forward testing is where you learn the most. So I see a lot of people, they have great back testing results because they tailored their approach to a specific market condition. And then you take their strategy, you put it in the live markets, and it's a huge losing strategy. You get into massive drawdowns. So remember, backtesting is cool, it is needed, but it is only one of the keys to success. The most important part is live testing and live trading your strategy, seeing if you can actually make money in the markets. Ballout was looking for it at a Tesla robot, but he decided against it. So are you a trader or an investor? Well, I would say I'm both. I trade some short-term setups. So right now I do have short-term Euro GBP long, USD CAD long, Euro CAD long, USD Yen long. But I do have an investment in the S&P 500 long-term, Bitcoin, Ethereum. So I'm doing both, but my main thing is trading. So I have much more capital allocated for trading than compared to investing. What about the risk of France political unrest affecting the euro? I don't think it's going to have a massive impact. I just personally don't think. I think euro dollar could actually hit 1.22. I think that's a healthy target. So hit these highs, let's say these swing highs. I think euro is doing well. I don't really care about France. I saw it. I did some research, but in my view, it is just something that is not going to have a massive, massive impact. Like France is a part of European Union, but it's not the biggest part. It's not like a huge chunk of EU. So even if the worst case happens, I don't think it's going to be so problematic as maybe some people believe. With such trades, you will be placing 3 to 5 trades a year. Well, I place quite a lot more. I think I place 1 to 2 trades per week. That's just the average. So yeah, gold retracement to 3,400. I would say 3,500 is a good target. So 3,500 up to this level. I would definitely be looking for buy setups at 3,500 right there. Okay, that would be pretty nice. 3,400 is right there. We could hit it, but I think 35 is a big psychological level, a big important level of support. So I would already be trying to get into buy setups at 35. Okay. Losses become part of the game, part of the system. That is true. Just no one has 100% win rate. The best win rate I've seen people have is maybe 60%, 55 to 60%. And the best of the best of traders have maybe 55 to 60%. And that is extremely hard to achieve. So everyone takes losses. Every single trader took a bunch of losses. Most traders have a win rate that is below 50%. That means in most cases, you actually take a losing trade. Of course, as long as you keep your winners bigger than your losses, the mathematics makes sense, but you need to get used to the feeling of losing. Can't agree more with losses drawdown. From my side, you need to ensure not to invest money you can't afford to lose. Yeah, that is very true. If you blow the account, ensure to identify your mistake. Well, it should never, if you're a good trader, if you have been doing this for a while now, it should never reach the point where you blow your account. So you should never reach that point of having zero in your balance and blowing all of the money that you put in. Then you did something completely wrong in terms of risk management. If you're risking 1% on a trade, it's going to take a huge amount of trades to actually blow the whole account. So you should not be even close to blowing an account. Like if someone goes into drawdown that is 20 to 30%, that's massive. That's massive drawdown. At this point, I would already consider doing something drastically different. Okay, so I don't think I've ever blown an account. Maybe in crypto when I was just starting out. I'm not sure. I had some small accounts in crypto. I would have to go through the statistics. But you should not even reach the level of blowing an account. Yeah, so Max says, don't even speak of me in terms of the number of trades. I've been speaking to Max and he takes like 30 or 40 trades per day, which is crazy. But again, if it works for him, then he just has to execute his edge. You have to do what works for your personality. For me personally, taking 10 to 20 trades per day would be too much psychologically, too big of an impact. So I prefer to be a swing trader, taking 1 to 2 trades per week. Hello, Marco. Is it a requirement to withdraw every 2 weeks' time in Bitcoin investment? It's not a requirement. Like I've bought a chunk of Bitcoin and Ethereum, I think a year and a half ago. I still haven't withdrawn anything. So there is no requirement to withdraw. Definitely my mistake in the past, preaching risk management to myself daily. Yeah, it happens. I mean, it's part of the game. People blow accounts. It does happen. But that is why you need to learn from that and make sure it doesn't happen again. You know, it's okay if it happens once, but if it happens twice, then you're doing something really, really badly, let's say. I blew a few accounts when I was starting up 4 years ago, but not going good since last 2 years. As long as you learn from it, as long as it doesn't happen again once you get the knowledge, then you're okay. Ray says, what is your definition of forward-looking for the market? Well, I'm not sure what you mean by forward-looking. I can only make forecasts. So I make forecasts and I place bets according to my forecasts. So my forecast was for Euro GBP to hit this level. So I bought, had to take profit. USD CAD, my forecast was for USD CAD to appreciate over time. So I got in, I identified a good level to get out in terms of the stop loss and a good level to take profits. So yeah, forward looking, I'm not sure what you mean, but forecasting could mean forward looking. How do I forecast? I mainly look at the edge finder. So what I did throughout the stream, so I looked at the current numbers, the current strength of currencies, and then I looked at the GDP. I looked at unemployment rate. I looked at NFP. I looked at inflation. And you can spot trends. We can quickly browse through the currencies. US dollar, up and above target. That's bad. New Zealand dollar, kind of okay. JPY, lower. So inflation is going lower. It looks okay. It looks healthy. Pound, rising inflation. This is really bad. 3.8%. That is super high. Euro is okay. Steady at target. Swiss, looking okay. CAD is looking okay below the target and kind of flattening out. And the Aussie is in a downward trend, which is good, and around the target. So the worst one is the pound, and just 4% inflation, you're going to feel that. As a citizen of the UK, you're going to feel this massive inflation at 3.8%. So yeah, I like to look at both short-term data and long-term trends, right? And from that analysis, the CAD looks the worst. Okay. Where are the live trades show size? So for the live trades, I do have my MetaTrader. I do have the CTrader accounts, but I don't want to pull them up, to be honest. I mean, for my MetaTrader, it's kind of like personal logins. So yeah, I don't really want to put it out. What I can show you is like DNA fund accounts, since this is the sponsor of the video as well, so it makes sense. I could also show you the C-Trader accounts. I do have a MyFX book if you want to see it. It's on my channel. So if you want to look at a track record, you can go to my YouTube channel, type in MyFX book, and you're going to find it. So a quick recap on the Forex side. Did anything change since yesterday, Marco? Well, since yesterday, and we're approaching the end, so this is probably going to be the last question. Since yesterday, nothing much. We had the Bank of England. We also had the Bank of Japan. I did some research about the Bank of Japan. There wasn't really quite a lot of developments. They didn't raise interest rates. They talked about potentially raising them in the future, which would be bullish on the yen. And the Bank of England didn't do much, to be honest. It wasn't like a big volatile event. The only thing that did happen is we had this news where, basically where the pound dropped massively. And what that did is it made Euro GBP go up and the pound USD lose a lot of value. So I would say nothing much changed, except maybe that the pound heavily lost value through the night. So that is the only development. And that would be about it. So if you guys want to check out DNA Funded, you can get 25% off with the code A1Live. Make sure to use it, but also make sure you're not blowing through the challenges. Make sure you're actually ready for the challenge. I will see you guys next week on Monday. Now you know what I'm watching. My favorite thing is the Aussie CAD. I'm gonna be placing a buy setup after the stream. And let's look at gold. Let's look at silver. Let's see if we can get into some buy setups. So thank you guys very much. I will see you guys next week, and stay safe in the markets. So see you.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.